What's going on, guys? This is Lior and welcome back to my channel. Now, what I thought I would do in this video is talk about the most common objections and questions I get from passive or capital investors when they're thinking about investing into my multifamily deals. So whether you are an investor, right, looking to invest into someone's deal, or you're an operator or syndicator like myself, this video will help you with those three most common questions that I get. So with that, let's get at it. What's going on, guys? My name is Lior and I am a multifamily investor out of Boston, and welcome to my channel. Now, before I get into the meat and potatoes of the video, two super quick things, guys. Number one, if this is your first time on my channel, first of all, welcome. Second of all, make sure you smash that subscribe button for me. I'm putting out tons of new videos every single week talking about all different facets of multifamily investing, including syndication, raising money, execution, construction. I give you guys walkthroughs of my own projects. So if that's the kind of content you're looking for, make sure you subscribe to the channel. So with that, let's get right into it. And as I said, I thought I would shoot this video about some of the most common things I hear from capital or limited partners when they're thinking about potentially investing in a deal, right? I've been raising money for a long time now, and I've kind of heard these ones on, repetitively over and over again. So I thought I would tackle them. So let's get right into the first common question / objection, which is, hey, what if I lose my money on this deal? And the answer to that I like, the way I like to kind of approach this and explain this to potential capital partners is, look, at the end of the day, first of all, this is an investment, right? Whether you're buying stocks, bonds, crypto, and we all know what's been going on with the crypto market, right? At the end of the day, it's an investment and it certainly has risk to it, right? That's just the definition of an investing. I like to point out some of the key facets of the deal of our team that make investors feel really, really comfortable that the downside is pretty limited. And I like to first talk about the asset that we choose to invest in, right? And the asset that we typically choose to invest in is a multifamily building, right? And I like to explain to investors, look, at the end of the day, right, multifamily will always be in demand because it provides housing, right? And as long as people need housing, there's always gonna be some sort of demand for what we're investing in, right? So there's definitely intrinsic value. I then actually like to drill even further and then again, talk specifically about the market we're investing in. Now, if you guys have been following my channel, you know I've been very, very heavily investing in Boston, literally right in the city or within 10, 15 minutes of the city. And I like to explain what makes Boston so unique that drives so much demand for housing, right? And I usually talk about population growth, job growth. I talk about the different industries that are here, right? We've got amazing diversity of industries, and a lot of these industries are actually super well paying, right? I mean, we've got finance, tech, biotech, pharma, healthcare, education, right? There's just so many different industries here, which of course attracts jobs, which of course attracts people, which of course creates the demand for housing. So that's absolutely providing a lot of safety cushion for the investment. And then finally, besides the actual market and the asset, I like to talk about the team, right? Because at the end of the day, execution and operations are absolutely king, and you have to nail those down, right? So I like to talk about the team, our experience, how we work together, and just how we've been able to execute on these kinds of projects over and over again, right? Multifamily is what we do. That's what we live and breathe, right? So I kind of like to go into that and explain, look, this is literally what we do every single day. This is really the main asset class we invest in. We know this in and out, and I think that limits risk by quite a bit. And finally, the last thing I like to say about this point too is there is a lot of a financial alignment between my investors and myself, right? Because we of course all want the upside on the deal, right? I mean, we're buying these deals because we think they're great deals and we like their future upside. But we also, as the operators and syndicators, typically invest into the projects as well, right? So we have our own cash invested on the limited partner side as well, right? So that means, we are riding this journey just along with our capital partners, right? So we are financially aligned. That's how I like to typically structure my deals, which again provides more safety cushion for the limited partner who is, who's fairly wondering, how is my money protected and what is my downside? Question number 2 that I get quite a bit is, can I sell my shares after closing, right? And I'm gonna answer this question from first an execution perspective and then more from like a legal structural perspective, even though I am not an attorney and this is not official legal advice. So from an execution perspective, first I'd like to explain to folks that, look, when you're investing in a syndication, right, these are multi-year projects, right? So as an investor, I count on the funds for a number of things, right? I need them for closing, which is for the down payment, but then I also typically need funds for my soft costs, right? Typically, there's some sort of stabilization aspect in our projects, right? So we need that cash to kind of float the project while we're doing whatever needs to be done. Sometimes, depending on how the deal is structured, sometimes we use those funds for construction. And I know a lot of syndicators and operators do that as well. Right, so there's just a lot of different use for those funds. So having the committed funds and having them in there and knowing that they're in there as an investor and the actual lead sponsor and syndicator is absolutely key, right? Because I need to manage my liquidity. And if you're a sponsor, you know this, right? Managing liquidity and managing your funds for every project is so key. There's just always so many invoices, costs, having someone ask for their money back can be a little tough when you're trying to manage the financials of the project. Now, all that being said, I totally get that, sometimes there's things in life that come up and that is 100% reasonable, right? I mean, there's just things that we don't anticipate that will require funds back. And I've had that happen to some of my investors in my projects where I've essentially had to sell out their interest. Now, from a legal perspective, again, I am not an attorney, so this is not official legal advice, but there are different ways of structuring the operating agreements for each project and each property that determine, in true manner, can the shares be sold, right? I've seen operating agreements where, there's specific language that says they cannot, right? And for whatever reason, they cannot be sold and they have to be maintained in there. But I've also seen operating agreements that said, yes, you can sell your interest, but there may be some certain rules or regulations around that, right? Sometimes it could be that maybe there's a first right of refusal for other members within the LLC to buy out the shares or the interest. It could be that there's, whatever other rules it could be, or it could say, yeah, you're welcome to sell it to a third party if you can find that, right? So again, make sure you read your operating agreement, make sure you ask these questions up front because it is an important question that does need to be tackled before making the investment. And then finally, the third most common question and objection that I kind of get is, are you and your team experienced enough / old enough, right? And typically, I get that from new people that have not invested in our projects, right? And again, if you're a sponsor or, a syndicator yourself, you know this to be true. But I really like to highlight, as I said before, our team, right? Because again, real estate investing and multifamily investing is 100% a team sport and needs to be treated so, right? So I really like to highlight that, look, I partnered up with people that are experienced, that also have great knowledge in this space and the sector, right? So we usually go through that. In terms of age, if you're on the younger side, when I was first starting out to do projects, way back in my early 20s, I actually ended up using that kind of as, I kind of turned it around and used that as an asset, right? Because I said, hey, look, I'm partnering up with really experienced guys that, have been doing this for a long time. So that's number one. And number two, as a young person, I actually think it helps, right? Because I don't have any other commitments. I don't have a family. I don't have kids. So for me, it's 100% dedication to the job and to the business plan, which I think is, kind of unique. So, if you're kind of getting this objection as a sponsor or syndicator, I would definitely highlight your team, definitely highlight your personal strengths and what you can add to it. And I think that should make your potential limited partners feel really, really comfortable. So if you guys have any questions about any of this, again, these are the most 3 common objections I get. If you guys have any questions, thoughts, whatever it is, make sure you put them in the comments below.